Hello and welcome, What the Finances, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what has happened in the world of finance, investing, and markets. On today's podcast, I'm happy to welcome Francis Hunt, who's a trader, technical analyst, and teacher, as well as the originator of the Hunt Volatility Funnel Method. Francis, thanks for joining the podcast today.
Absolute pleasure to be with you, Anthony.
I'm really looking forward to this. So I guess if we start, in the world of macro, it seems like things are getting a little bit crazy over the past few years and maybe the past 40 years combined. So it's almost hard to understand what you should be paying attention to. So from your perspective, what are the key things that you're paying attention to?
Yes, so as we were just pre-discussing, one of the big shoes that have dropped and I think has been led to a real turning point in all forms of markets and has had a knock-on effect on currencies is the debt markets. It's our overall impression that the 40-year bull market, which transcends most of my life and it certainly engulfs all of yours, that started with the Volcker tightening of rates into around about 1982, and there was a big gold bull market that was associated with the stagflation and inflationary era that went with it. Debt markets have been in a 40-year bull market since then because rates have been ratcheted consistently downwards. And that essentially has meant that the bond market has been a great investment. It's led to the popularity of what's known as a 60-40 portfolio, which has been very common. So 60% in equities, 40% in bonds. And when the equity markets have bad years, the bond markets usually have good years. So they've been sort of binary polar opposites. When people are afraid, they go into the lower risk, I put that in inverted commas nowadays, debt markets and flee the higher beta equity markets. So there was a portfolio structure which was very common in investment houses and led to pretty reasonable balancing. It took the volatility out of performance. Instead of having a 30% equity performance and then a minus 20% the following year, the bonds would take some of the edge off that. And reducing the volatility actually is increasing the overall alpha because it means less ebbs and flows. It's been shown that institutionally, or more, I should rather say retailers, typically sell after bad years, which is almost invariably the wrong things. And they double up and buy more after a number of good years, which means they're clustering in at the tops often and they're bailing at near bottoms. And that's emotional responses to markets. Now, the bond markets, reducing that vol actually means people do less harm to themselves. So people are their own worst weapon in terms of decisions, and the 60-40 by crushing that volatility. But I fear that that's it for the 60-40. You'll hear a lot of people saying, well, it'll be a better year next year. It was an extreme outlier. So this is the worst ever year for bonds and equities collectively that you've just had and seen. And people say, well, normally after that, everybody reacts and, it'll be better next year. So sometimes you get stock market crashes and you have a bad year and it's normal cycle. And our argument is it's not normal cycle. It's an end of a 40-year cycle. So in that, you've had booms and busts, many booms and busts, both in property and equities having run-ups and the dot-com and then the subprime and all of that run-ups and then crashes. And it's nearly always been the meme of buy the damn dip. And eventually that is exposed for being a meme. In other words, we're going to go into a far more stagflationary environment that will have some elements of what was the 70s, only I would say in a more extreme way. And within that, I'm also expecting demand-destroying events that's going to lead to the introduction of a central bank digital token, UBI for most people, and credit scoring, and some quite draconian trace surveillance finance type components that central bankers have been wanting to impose on us. So these are the key themes, if you want the answer. Debt market has turned. In 60-40 portfolios will not work nearly as well. In fact, I prefer a 60-40 portfolio of 40% gold and 60% arable land and commodities. So you could have that 60% made up of land, other commodities, not precious metals, such as copper, tin, nickel, and then you would have 40% precious metals. That would be the commodity cycle for me. Also, you could have investments in fertilizer companies as a very good play on farming. And you could have a good investment in shipping, which is a very good play on the deglobalization trend. So depending on how much detail you want, we actually had a golden era under Greenspan, where he said there is no inflation. We can barely get an inflation. We can keep dropping interest rates. And that was driven by two things: globalization, which meant corporations ever pursued cheaper points of costs of production. And we saw outsourcing out of country. A lot of it going to China, of course, but Thailand, the story, the low labor inputs. So the unions, the Teamsters of America and the unions of Britain lost an immense amount of power because people just said, listen, if you ask for too big a wages, we offshore this. And that led to a continual deflation in everyday commodity prices, from washing machines, cars, a lot of things. And a lot of it technologically driven efficiencies. So you had the Japanese with their, super efficient manufacturing production lines for Toyotas, etc., and all of these skills getting into other car companies as well. So you had essentially quite a strong downward pressure on inflation. So the likes of Greenspan, who was essentially the central banker for the world, although he was the Fed central banker, continued to run interest rates exceedingly lower and lower. And what ended up happening is we started stretching multiples on equity. So you always have inflation when you allow money to proliferate. And they were allowing money to proliferate, and they were putting the cost of borrowing too low. So what ended up is people were levering up, and they were stretching multiples on equities. So we now have an environment where equity multiples are well beyond normal levels of stretch. I mean, for the amount that Apple actually grows now, in the past, those kind of companies had 9, 10, 11 PEs. And it's still sitting at around 20 odd. You could, without losing any market share, without losing any revenue, half the Apple price and just be back at legacy average, not extreme lows before. So we have an overstretched equity market. So the 60% part is fat and full of hog and needs to digest and can't really eat that much more. And then you have the 40-year bond market, which is this proliferation. We've created so much debt that it's very difficult. Essentially, value is a function of scarcity and also safety. When you're talking about risk. The risk has gone up on owning debt. It used to be referred, when I did my MBA, as the risk-free rate. I know you're studying yourself. Debt, when you used to do sort of weighted average cost of capital, net present value calculations of an equity, what was it worth? You'd discount the income stream and you'd compare it hurdle rate. Is it giving me a better return than the risk-free rate, which used to be a US 10-year government bond, what you get paid there? So you wouldn't do a business if you're doing an economics degree, if it's only going to give you the same return as a risk-free bond would, because any business has risk in it. And that was the benchmark for financial mathematics and capital. And I'm sure some of this might have studied and come across. I'm sure it's still taught. And the whole point of this is that that's not a risk-free rate. It never was really, but now that we're at the fag end of a debt cycle where there's too much of it about and it's unsustainable. It's never been more oversold as risk-free than it is today. So debt forgiveness, you're aware of the UK events, we can touch on that. The Japanese debt had 5 days with no bid on it. So there's so much of it proliferated around. It's a bit like I have a second-hand car and I assert that it's worth £1 million and I put it up for sale for £1 million. That doesn't make the car worth £1 million. And even if my right hand sends £1 million to my left hand and I say, yes, you see, I bought it, one company I control buys it, and I say there's been one sale, that's insufficient volume to validate that car truly being worth £1 million. When people all over the world want to spend £1 million for buying that and similar things, in some level of volume, then you know it's not a controlled market. There's independent forces. So this is where we sit with this debt. It's all over the place. It's like you've got rooms, it's popping out of your houses. Everywhere is this pillowcases full of debt. And we continue to assert it's incredibly valuable because of its risk-free nature. And when you have something that's so prevalent, it can't be that valuable. And that makes it not risk-free either, because you're only waiting for enough people to realize that. And they will, let me absolutely tell you that we're just seeing tweets coming out now. Oh, the British pension scheme realizing that the bond market, this and that and that. So the next time we get a run into bonds, I think it'll be smaller. So if we have a demand killing event like a revisit pandemic or something, and everything sells off and everyone runs to safety, you're going to see less of a safety trade in bonds. They will strengthen and the yields will go down, and that will compress inflation for a while, but it'll never get to the lows that the COVID-19 March 2020 has brought about. So we are now going from lower highs and lower lows on the yield trending down to the opposite. We'll go higher highs and higher lows. So that's a prediction, and that's a major inflection point on debt. And that is the big thing that many people need to realize. And that has driven currencies and a lot of other things as a result of it, because those two overlap. They're not separate silos, they overlap. And that's what saw the pound sell off. People were taking their flight capital, which is the ability of money to move from one geography to another place. Probably it was the dollar at the time. Why? Because Britain didn't, they threw, as I mentioned to you, the Prime Minister Truss, who I was no fan of. I'm not a fan of any of these politicians, and the Finance Minister under the bus, and just got new ones, but they weren't really the problem. The problem is there's been a buildup of too much debt for ages. They did tax cuts, which is actually not a bad idea, but the markets threw them under the bus for that. But the fact of the matter is, the replacement, Bailey is his name, sorry, Bank of England hadn't put rates up at the same rate as America. So pounds started to leave Britain and get converted into dollars and move to America, because it's a bigger country. Its debt market will be deemed stronger than Britain. There's a lot of holders of it. There's a lot more liquidity, and the currency is going to go up, and you're going to earn a higher yield. Why would you want to sit? It's it's still English language. It's still most the same. So you saw an exit from buying the bonds, so that you actually didn't have a bid, and you had pension funds that needed to sell part of their debt portfolio to pay pensions to people that are 55, 60 plus. And they didn't have the cash, and they couldn't get fulfillment of orders. There was no bid. And if they chased the market down, you would have had a crash in the prices. It would have been my £1 million second-hand car suddenly selling for £10,000, more closest to its value, for example. And that means all assets suddenly get revalued instead of being worth £1 million down to 10,000. And they can't have that, because that's like pulling back the curtain and one sees the emperor has no clothes. So they've had to maintain it. So the Bank of England rushed in and created liquidity, and there was panic and drama. So that's quite a long answer, form answer for you, but there's quite a lot to unpack in that. But debt, and the spurious realization that debt is actually A, not risk-free, is B, losing value against the inflation in terms of the interest rate it's paid. The inflation in last measure was 10.7 in the UK, where you happen to be sitting right now, and the interest rate is 3.5. That is a guaranteed compounding loss of some scale. You add 7.2% on that. You're compounding a 7.2% loss, and your currency is going down in top of that. It's a bad, bad deal. And more people are realizing it, and pensioners are not going to be able to meet their commitments.
Yeah, it's crazy to think. So, and yeah, as you mentioned there, you covered a lot of topics. So I guess we'll try and unpack that. So if we go to what you said before about how I guess Volcker, increased interest rates very high, and then Greenspan sort of was very famous for putting them quite low. Do you think that these central bankers get too much credit for inflation and what's actually happening? As you mentioned, that it could be more the macro themes in terms of globalization and sort of demographics during that period. But now we're getting to the point where those themes are reverting. They might actually get more blame than they probably deserve, because it's actually these global themes that are impacting it.
Central bankers have received insufficient heat and blame for what they have proliferated. Certainly all those that have gone before those that you have now. So, I mean, if I was having a Truth and Reconciliation Committee for the forthcoming reset and the causes, the Adolf Hitler would be Alan Greenspan. He would be the chief villain in the Nuremberg trials for economic crimes against humanity. He was given the golden era, and he allowed everybody to get, excuse the phrase, shit-faced on debt. And that's essentially what's happened. He was supposed to take the party bowl away, and he said, there's no inflation, we carry on. Not recognizing that he was riding the wave of globalization, which was making it a lot easier. And he needed to be a sterner taskmaster in the good times, because he essentially created a scenario that Bernanke that followed him, Yellen that followed Bernanke, and now Powell, each had to double down on the policies of Greenspan, making the situation ever worse. Only now the cycle of globalization and the gift of globalization first flatlined and is now actually being reversed as we see the sanctions. The one thing I would say to many people listening to this is that it actively seems like government's policy and central bank policy is trying to inflame a reset. In other words, you can't be this stupid. Many people will say, don't put down to, intent what can be explained away in sheer incompetence. But these people are actually smarter than that. They want you to think, if you're criticizing, that they're incompetent. This is an engineered takedown. I refer to this as a controlled demolition of a global economy. This whole Ukraine, Russia, the sanctions, the antagonism of China, various other ploys that are being pulled are all designed to create stagflation. And can I also highlight, if you want to go to a technological oligarchical system and you want to get a situation where you have hollowed all the middle class out, so think the Bolshevik Revolution, communism, only you're doing it instead for today's era, where essentially there will be an elite ruling class. I wouldn't call them elite, but they're certainly psychopathic, and a spoilt and a peasantrified rest of the classes. The way to do it is exactly what's happening. So you create a major bull market first, you create a pump and dump scheme in essence, and a huge secular pump, which gets everyone really balls deep into hyper in financialization of everything. And then you crash the financial system and you take everyone down with you, except those that are orchestrating the game and are buying up hardened assets with soon to be devalued fiat and debt to nothing. So inflation absolutely enriches the billionaire class, and it destroys the upper middle, the middle, and the working poor classes. So that is the tool. And they have gone about creating, first, there's no inflation, let's just keep printing, so that when eventually it shows up, we've properly dug a big hole, and now we have the mother of all crashes on us. So we're going to go into a phase that is we've described as hyper stagflation, which is essentially an extreme version of the stagflation of the 70s. Which is why you're going to have a lost decade or two on equities in revaluation, particularly in the mainstream equities, consumer, retail, those kind of things. Not so much in miners and commodity providers and maybe farmland. Those things will actually do well. So we're going back to basics of physicals and tangibles. And debt markets, all the instruments of hyper-financialization are now so bloated, they're going to contract and stagnate for an extended period. So anything that's banking system, the derivative system, everything like that, and we'll probably have major crises around them as interest rates continue to hike. They will be the first thing that breaks. because I think they're going to have to keep tightening till something breaks, even though the rate of tightening is showing signs that they will slow. Powell is in a position where he was quite clearly late to deal with inflation. We called that. We said they're not moving on inflation. They used every single word. There's no inflation. Oh, it's passing inflation. Oh, it's transitory. Oh, it's this. They went through everything, every stage of denial, to then do 4 back-to-back 0.75 hikes. So there's a lag effect on those hikes. Many people that are on fixed deals, if you're a homeowner in America, you might have a 4-year fixed deal or a 2-year fixed deal, and then you'll have a reset. It's only when that reset comes around and you have to get a new 4-year fixed deal that you actually get the impact of the interest rate hikes. People who spend and live on credit cards will get it quite quickly, but credit card debt pricing didn't come very low. It was always one of the most expensive. So a lot of these things, higher purchase on cars, we definitely have a subprime auto crisis going on in the States. I mean, when I was there were 72-month deals, which probably were paying off 60% of the car. So, and then a balloon payment. So, you know, my father paid his house off faster than some of these guys would pay a Ford truck off. So that's going to, all of these elements, and that's going to hit consumer retail, obviously automotives, it's going to hit debt, it's going to hit a lot of write-offs, it's going to hit personal bankruptcies. So this is stagnation. This is now paying for the binge. You've partied it up, you've snorted lines of cocaine and down tons of tequila, and everybody warned you that you're not going to feel too good for your exam tomorrow at uni. And now it's the next morning, you've had an hour and a half sleep and you feel like death warmed up. That's the economy's situation in a parable.
Yeah, you're facing the consequences. So, which is really scary to think. So if let's say, you know, there's still this thought that Powell can land the plane, which I'm guessing you don't believe and I don't believe either. So you don't think that we could see deflation coming in the near future and then he can lower the rates? Do you think inflation will just stay out a little bit too long? He'll have to keep the rates high and then we'll see this big collapse. Is that sort of your thoughts?
So the inflation is runaway at the moment in spite of the American numbers coming down to the 7s. There's a couple of reasons for that. The BLS which is the Bureau of Labor Statistics, and they also do the inflation, I think it is, the Bureau for Statistics. I might get the names wrong, don't quote me. But they understate. John Williams of Shadow Stats, which uses Ronald Reagan's measure of 1982, is far closer, and they're in mid-teens at the moment. But that's an understatement. But that's the benchmark they've chosen, and there's all sorts of chicanery and trickery, and the retailers are co-opted into a shrinkflationary strategy where you get sold a 500-gram coffee bag that looks almost identical to a 575 one you bought last year. So there's a lot of chicanery and trickery and deception. But even if we take the official number, because that's what everybody is working on, there's never been an instance where you've gone over 5% inflation. And this Stanley Druckenmiller has highlighted that you pull inflation back on lower interest rates than the actual inflation rate. You know, if you look at what Faulkner had to do, he had to go a lot higher than the inflation rate in interest rates to rein the inflation rate back. So the way they will is there'll be massive demand killing events. That's the only way you kill this inflation. And that's referring to what you experienced during March 2020. There's already Bill Gates out and about warning about before 2025, there'll be some MERS type thing. So this depends whether you think these things are just random or whether they are being engineered. I won't push you one way or another, but he seems to have an incredible forecasting rate. And I would say those kind of things, or a bank crisis or a bank hack, a globalized bank hack blamed on Russia, will kill the current inflation, almost certainly. So to your question around, I would prefer to say disinflation, which would be the reduction in the inflation rate. A major demand killing event is expected by me. which I think would be engineered personally as a view. And that will bring things under lever, and that will cause a safety, a dash to safety again, which will again support the dollar, but might give a small bump to the bonds, but not as big as the event of COVID. So you will have your first, if you understand Dow theory, where the yields are making lower lows and lower highs, we've now turned, in my opinion, and we've had a run on yields. So we've had a higher high, but we will then make a down in a demand destroying event. We'll have a yields crash down again, but that low will never get to the low of COVID. And then we'll go back up and we'll go back to higher highs and higher lows. So the whole thing is they have to devalue this debt. And this is where the billionaires get rich, because they got to borrow cheap. And it's usually oligarchical corporates that got that borrowing, which is controlled by people that are big shareholders. So what, say, for example, Elon Musk might borrow at Tesla, or Apple borrows at, is not what you would pay on your credit card for. There's two different tiers. So there's an apartheid of lending in terms of rate as well, where they've been given incredible benefits and access to capital, and they can secure resources. You know, if silver is required to make iPhones, they could, you know, buy silver mines. They can vertically integrate the entire chain and own these things, which are suppressed and have high costs under the energy regime and are actually trading way too cheap. So that's what I would expect to see, is these oligarchical technological megacorps that are pretty dark state, wholly integrated into surveilling everything you do and sharing that information. You need to read the Snowden, I think it's a sort of glass mirror or book on everything that goes on there. But in essence, those are controlled by Vanguard, BlackRock, the biggest shareholders. And, you know, again, this is a dark state corporatocracy that resolves in there. So they'll need these companies to continue to exist. So these companies could vertically integrate their supply chain and start buying commodities before the next commodity. We're going to have a commodity cycle. The things that will go up will be the commodities, and also shipping and moving things around. The cost of that is going to go up immensely as well, especially once we've de-rigged and broken up the supply chain. So Jim Rickard speaks of the supply chain as not being, you know, part of the economy. It is the economy, moving things backwards and forwards, just in time inventories, all of these things, the systems that go with that, ordering new stock, the transport thereof, the energy prices thereof, you know, anything you've ordered on Amazon, the website portal part is the light work part of it all. It's the frontal interface. It's everything that happens behind that. That is the economy. So supply chains have been damaged immensely, and they are, you know, they're facing a whole rejigging, because now, you know, China, in retaliation to America, is not buying America's soybeans, it's buying Brazil's soybeans, and America were trying to cap, claiming, you know, technology was being stolen. So you're seeing a whole rejigging of supply chain. The longer run, the West does badly, I'm afraid, and the money follows the gold, and the East, the Belt Road, and into the Middle East. You're going to hear a lot more about the Middle East, Dubai, Qatar, Israel, Turkey, into Europe, through to China. So the Belt Road economic expansion. Again, it's not just a supply chain aspect, it is the economy. So that's what's going to happen. So we will get some disinflation, but it's going to take a demand destroying event. Wars, hacks, you losing your money. I think the FTX events in crypto was a microcosm of what could and may well be happening in the banking system as well. Orchestrated criminality. You just haven't been able to peek behind the curtain, and it's a much bigger, longer game. So the bigger scam runs for longer than the smaller crypto scam. So it wouldn't shock me that they will lay claim that Russia's hacked all the Western banks, and you'll wake up to a zero balance and a message from your bank, or ATMs will be reduced to how much money you can have. And these are quite ridiculous predictions for normal times to be making. But some degree of event, we might have a credit, a repo, or a derivatives-based bank failure coming soon. So Powell's going to keep tightening until something breaks, and that's going to bring the demand-destroying event. Because he's got to stay out in front because otherwise there's a lot of risks on the dollar, and there's never been more threats to the dollar hegemony. So he needs a strong dollar when it's being attacked, because then at least people that go, well, we probably should still keep dollars because dollars are going up. You're getting the highest rate of yields. Why do you want pounds or yuan or yen or anything else? So he's got to stay out front until tightening. But he doesn't want to be the guy that throttles everything. But I think he will be anyway.
Yeah, that's fascinating. So I guess I'm sort of going to take another step back because I know we got some really interesting points about what you think will happen to the future. So, is there any way that you could, and this might be the positive person in me trying to hope that all the things you mentioned don't occur? Is there any way that maybe Powell, Bailey, Lagarde, can they turn this around, or do you think that the overspending and the poor decisions of previous central bankers such as Bernanke, Greenspan, do you think they've taken it too far and there's no way to save what's currently going to happen?
Yeah, this is the soft landing hypothesis, and there's no soft landing for me. I would put that possibility at sub 5%, 5 and sub. You've got to remember rates are higher, and you just have to look at the 10-year US. Rates are higher on higher debt. So you're actually in a situation where much bigger interest payments are taking place than prior to the repo market collapsing in 2019, which just preceded the March 20 events that started to break December, Jan of 20. And they came just in time for Powell to actually send an immense amount of money to the inner circle of primary dealer banks. So very underreported was the 20 trillion plus sent to European as well as American banks. So everybody knows there was 6 or 7 trillion odd in small business aid, and to the retail a little bit of money, and then a lot of politician quangos getting bailed out and sent free money as well. But not many people know that over 20 trillion was sent to JP Morgan, Goldman Sachs, Bank of America, Credit Suisse, Barclays, a host of banks. I mean, BNP Paribas got 3.69 trillion alone. That is more than half the total package for the citizens of America for the COVID and the lockdown and the shutting of their business. A single institution that is not even American. How many people? Why is this question not being asked? Because the mainstream media have buried this. You have to search really hard to find that article. That was repo market collapse. That's why it's very convenient that the whole COVID event came along and everybody was locked down where they can do very little damage to the banks, no chance of bank runs and all of that. And they could send out, as part of this package in March of 20, they sent out over 20 trillion to financial institutions. So I'm afraid to say, once again, banks have been bailed out on a derivative repo market Ponzi scheme. And you were told you created inflation because you got a bit of a furlough check and a little bit of a stipend for not going to work, and you went and bought too much stuff. This is absolute gaslighting, and that's why these central bankers deserve every criticism and a whole bunch more. They should be imprisoned because they're not working for you. They're working for the banking cartel that's put them there. You don't vote for them. The people that put them there are the people they serve. And it's not Joe Schmo in the street, let me tell you. They've got to pretend at a media level, it's a duality, that they're working to save you and the working man. We've had an absolute bend out of the Gini curve, which is the distribution of wealth in the States. An absolute bend out. And every time the question gets asked is, yes, it remains of great concern, hand-wringing to us about the fact that, we see in the working poor, and then they'll mention people of color, and they'll hit all the wokeisms, and female and LGBTQN, and they'll touchstone a few things, and they've all done it, and they've all continued to bend it out ever more. So never has so much wealth been held by such a small percentage, the top 1%. And that is exactly for the reasons that I highlighted, that the pump and dump policies of there's no inflation, super pump created, people with timing and leverage and access to cheap money make an absolute boondoggle and have the timing game. And that's your billionaires and insiders. You only have to follow Nancy Pelosi's trading to see that there's certainly no end to corruption. It is a cacocracy. We are in the end of cycle. This is Rome. You know, they're trimming the gold coins off. The reason we have ribbed coins nowadays is for that era when people were nicking and stealing and diluting. And in essence, you are alive watching a major fiat debt-based model come to its terminal. It's a pensioner in a wheelchair with emphysema gasping for breath. That's where you're at. And it'll steal and take anything because it's a heroin addict as well. So that's where you're at. And so the hollowing out of everybody else at the expense of a ruling class is at its extreme now.
Yeah, so you see the, I guess, death of financialization around the world, orchestrated to, as you mentioned there, create these oligopolies of.
Well, you'll be rolled into a new financialization scheme whereby the same people that were running the old one. So I'm a hope destroyer. I'm Mr. Bad News. I've seen enough of these schemes and cacocracies to think, you know, we have a lot of idealism in our youth. I was a student too at Wits University for a glorious year. I studied actuarial science, you know, for another glorious year. I was programmer. We can change the world. We can change the world. As long as the same people are holding power and passing it on to their kin and running the same scams, you'll start to get jaded. You will see that the same pumpermentals and dumpermentals, the same games are being run by similar kind of people. The whole treatment of this whole FTX saga and the fact that the CEO stood down just before, hasn't been arrested, so many things that are patently obvious. The role of funding the political parties. Why are the Republicans and the Democrats not immediately forced to return the money that clearly was Stone and Klein money? All of this is, no, we don't want that. We don't want to discuss that. We don't want to discuss that. No, it was all about CZ, Binance. So this is a microcosm. They are steering the narrative. The media shines the searchlight where they want it shone. And it's where the dark, dirty corners are where the same people and their spawn will be reinstituting the same game. And that is ruling and managing the masses to their personal gain and entrenchment of power, whilst hiding the fact that they are there. And the problem we have now is labor is becoming less critical because we have automation and robotics, which is why there's a strong eugenicist type model of pushing pensioners to kill themselves and go to Switzerland and do various things. There's all these various schemes, and it's now in Canada. There's a lot of quite shaky, non-Hippocratic oath, let's just say, type medicine being pushed at the moment. We harvested, if you'll excuse the phrase, a lot of elderly people with our treatment within the lockdowns and all of that. So there's a lot of demographic shenanigans going on. There's a real problem on fertility and birth. We have a new birth problem. We have a shortage, not an overpopulation. That's going to come at you like, wow, I can't conceptualize that. Aren't we overpopulated? Aren't we killing the planet? Aren't we doing all of this? The irony is all these mega oligarchies are the ones that created all the pollution. It's big oil, big tobacco, all the big corporates that, cutting up the Amazon jungle to plant soybeans, chasing out the tribes, planes of prime ministers that took and presidents that took back the Brazilian or the Colombian oil and brought it back under their nation states auspices, their planes falling out the sky. Unfortunately, the big corporates were the sinners as well. And now they pin that on you, the layman, and saying, well, it's your consumerism. But they're the ones that brought the financialization of everything and banking to create the pumpermentals. They're the ones stuffing you with a credit card with banks with tertiary interest rates and saying buy now, pay later. So, you know, the duality of their corruption and the gaslighting is extreme.
Yeah, I definitely agree. So for probably for the average viewer, there it doesn't sound quite positive for them. So you've mentioned
Well, there's
that,
opportunities.
yeah,
There are opportunities. So the notion that overall, the average layman in the street is going to have a chronic clampdown on his freedoms, his freedom of movement, freedom of everything, social scoring. You know, your battery car will be remotely disabled for 48 hours on account of a social media post that is disapproved in, you know, a couple of years' time. So all of these things where you tell people what you think and you puke out your worst, which I'm quite sinful in doing, will be held against you in coming. So you've got to watch it. Everything is captured. Your mails can be read. Robotics are doing a lot of this. And the advancement of robotics sees a much less of a need. Entrepreneurship was always the bringing together of labor and capital to create a product and provide service or value. And as labor is now more expensive, more error prone compared to cheap AI robotics, you're going to see a lot of the more menial tasks. There's a McDonald's now without a single person in it, essentially, which is robotic ordering, robotic pay work, robotic everything. So, you know, push that minimum wage too far. And it's at the bottom end where they've lagged inflation most. So you'll have people working 3 jobs, you know, doing evening shifts and earning stipends and being depleted away. So crime is going to be a problem. So the opportunities are getting physical, getting into commodities, getting into delivery systems where new supply chains were going to be brought about. So with every dark cloud, there's a silver lining. One of them would be silver for me. Big fan of rhodium, big fan of the precious metals complex. The ability to have arable land that you can produce food from. So we're going to go down Maslow's hierarchy of needs from self-actualization and wealth and status right the way down to shelter, physical stuff. You know, I'm watching the UK buy-to-let landlord getting squeezed out of the markets. You know, the interest rates have gone up. They can even be charged tax, even if they're paying more in payments, mortgage payments, than they're getting in on rentals. Now, they want the layman out. They want the likes of BlackRocks and the corporations to be the landlord and final extractors. It's part of a get the goyim off the land strategy. You should want the exact opposite. You should want to hold land. You should, especially if it's arable, agricultural, you should want to hold commodities, physical things that can be made and used into products. You're going to see the input costs of things go up immensely as currency devaluation takes hold across the board and debt devalues. Because where does all that money that gets lost? You spoke of disinflation. Once if debt ever gets re-rated down to near zero or zero, that is going to be out and out deflation, because that's how money dies. Every dollar or pound is borrowed into existence. So before debt can be zeroized, the money system has to change, which is why we await a CBDC and a demand destroying event. And what better than just nuking everybody's accounts and saying, oh, damn, this happened. Well, anyway, every crisis is an opportunity. We've got these new CBDCs and you'll get a following number for whatever balance you had there. And those that are poor will get UBI and given a gamer console. But long run, I don't think they have longevity in mind for people that are low value, useless eaters, to use Kissinger's phrase. So from that point of view, it's pretty dystopian. It's pretty 1984. It's pretty, you know, Brave New World. It's all of them smashed together. Logan's Run, a lot of them. They're all in there. But if you continue to be able to do something valuable and that's unique, that has not yet been roboticized, if you secure assets, I do think property taxes will climb high. People need to have structures. So even though you want to own property and all of those things, they will use taxation as a means to try squeeze you out. And that's what the buy-to-let investor in the UK is busy finding right now. It's just become a crap business. Yeah, so quite a lot of detail there for you as well.
Yeah, it's interesting. So, from your perspective, how would you invest in that yourself? I guess because a lot of the risk is that it could be paper commodities, it could be, equities, as you said, could be financialized as well. What's sort of your approach, or yeah?
So this is a particularly unique period. What I'm going to say is not something I say often, and it sounds extreme. I don't trust the banking system. I think they could pull an FTX. As I've said, an FTX is a microcosm of a much larger, longer sustained, bigger Ponzi scheme. So I think you should actually carry very little electronic money in banking systems. I think, ironically, you want to hold quite a high level of cash notes. This sort of stuff, fiat, as I say, most of these are pretty useless fiats, but I keep a list of them because there's dollars, there's Zimbabwean dollars, but that you want to keep at home because as long as it's still not invalid, you need to have a much higher level of cash. When they do the demand destroying event, people will be near to giving things away to get money for food. So I truly see quite a mini zombie apocalypse in terms of people will, things that you've taken for granted, going online and ordering and shelves being full, you're going to have a real lockdown. The supply chain, big part of the economy, it is the economy, has definitely been horrendously disruptive, and it's due a few more macro shocks before you get a new supply chain. And supply chains take a long time to bed down. It's a decade-long experience. So we're busy pulling up the current supply chain, and it's been damaged by COVID mandates on truck drivers, green initiatives that say you must have solar panels and batteries, and charging spaces, all of this taking up space. They can't unload containers fast enough. People bulk buying, and the people's behavior changes. This is the problem in inflation. If once people realize the fiat is worthless, you forward buy. So actually that brings even more demand forward, and it further feeds the inflation. We haven't fully had that yet, but it's coming. So as people realize debt is collapsing in value downwards, the value of the money is collapsing to match it, because it's a T accounting of liability and an asset. One is cash borrowed into existence, and then it's the liability of that cash. So as debt crashes, the buying power of that cash crashes, and you want to be getting out of paper, but you should still have cash at home for the grid down experience. When the ATMs go dark, only so much can be withdrawn when they're not dark, etc., and there's bank runs. That's going to cause a real reduction in demand, and that will curtail the inflation you're currently experiencing. But the minute you return to any kind of a normal economy, inflation will return. So rarely is inflation killed in one go. You get many return moves. It's like a monster in a vampire movie that hasn't had the wooden stake driven through its heart. It comes back at you 3 or 4 times. It's a monster best killed small. They didn't kill it small. And now you're going to really battle to put it away. So even the next demand killing event, you will still go higher again on rates. And that's just going to squeeze most people out of their assets, because most people have debt and borrowed assets. So one of the key things is reducing debt. Debt is a Trojan horse weapon to be utilized against your financial wealth. It's a destroyer. So if they go double digits on central banking rates, most people won't be able to continue with their houses. So most people have 50%, 75%, 90% mortgages. And BlackRock will be there to pick them up. Vanguard will be there to pick them up at paying dirt bottom prices, and then putting you as a tenant in your old home. And then you'll watch inflation and rental increases take place. And you'll get a bit of UBI in compensation, and that will be surveillance finance will be installed. Pretty dark.
Yeah, definitely very dark. So you'd say people should hold in cash, and then from there, potentially, I guess, physical commodities.
Precious metals.
Precious metals.
Platinum, gold, silver, and I like rhodium. But it's very thinly provided and it's super expensive. But you can hold a lot of wealth in a very small holding. And you might have to cross a border. It's easier to take that than 5 kilos of silver. or 100 kilos of silver. So you want to have a mix of those, and you want to have a combination of coins and bars. And as I say, reset properties where you are independent of grid and water. So rainwater harvesting is smart. Preppers, basically. This is prepper solar, where you run solar, little solar things to charge your phone. These are all where the sun's energy is free. And for now, the rain that falls on your home, you can collect without a tax collector being there. Although Nestle says you don't own that. Who an oligarchical corporation is to dare suggest that, I don't know. But they've been allowed to get away with that.
Yeah, it's crazy to think they'd say such a thing. So, Francis, thank you so much for your time. We've covered so many points, and it's definitely valuable for, I'm sure, lots of listeners. So, what is one message that you'd like people to take away from our conversation? If there is
well,
one?
Given that what I've given is not the height of optimism, you've got to also enjoy life. You've got to remember that you're having an experience and that all things will pass. So there's a mental game to this. There's a psyop element to a mental game. Exercise. I've just come out. I've spent 10 minutes in cold water submersion. I feel really invigorated after that. Your metabolism is kept strong, keep lean, kept physical, keep strong, keep learning, keep watching, get out of debt. There's lots of taking action is incredibly enabling, and it's incredibly galvanizing, and being a tiny bit better prepared every day. That's all you can be expected to do. So you take action and you do something of high value for others. What do you most love as a student or people of your age group? What are you good at? It could be, DJing at parties. It could be doing, making a product or cutting something up with your hands. I don't know. It could be anything. A yoga teacher. Find a way of extra income. Now's a good time to build income. Live within your means. Retire debt, particularly with students, audiences, student debt, if it's on you. And get that off your back, because that's a real monkey on your back. And I'm afraid for interest rates. Many people will say, oh, but that's fine. I have a fixed rate. I'll be fine. You'll be fine to a point until such time as there's a force majeure event where they can renege on contract. Contracts get reneged on. I just had a 7-digit sum stolen off me through my own malfeasance for having too much in any one institution, with the FTX going down. So, there's no recourse. I will get none of it back. And it's a lot of work to earn that amount of cash. So don't hold too much store or faith in contracted paper. It's good until it suddenly isn't good and it no longer suits the organization, and they're in so much pain, it's better worth their while to be sued by policyholders than to continue to offer the terms that you originally signed up on. So there's nothing as solid or as hard as holding the gold in your pocket. That is yours. Let them send a man with a gun to get it off you. That's a very specific event. Don't talk about where you keep it, obviously. So to do that, get into precious metals and miners, things like that. At the moment, they're very low miners. I think they'll be outperformers because people are realizing real commodities are actually money, not fiat. Gold is true money, and it's been for millennia. It sounds like an old gold bug. I'm also a South African with a South African accent, so everyone will think that's the automatic thing. But during the financialization era, it was a terrible time to hold gold. You had to play the financialization game. We're coming to the end of the mega financialization era. And those that are deeply indebted will go under. So start playing the new game before you have it enforced upon you, so that you're already ready. You've got a running start. It's a 100-meter dash and you've already started the sprint. And that's what you can do by taking action, generating income, holding cash, building precious metals, and getting self-reliant. Even if you're not married and you're a young student, commune, grow some stuff in the garden, get some solar panels. If you can afford to buy property between a cooperation of a number of you, rather than involving banks. It's better to have a share in a property with no banks than to have a sleeping, aggressive Trojan that can change terms and conditions, up interest rates, and really destroy your finances. So that's the best advice I can give. And take a bit of enjoyment out of every day. Remember that. So as I say, this is dark. Do physical exercise. I live near the sea. I ride an e-bike near the beach. I breathe fresh air. It's all good. Life is great in spite of it. And all things will pass. Get this done early in your career. It will be better than the timing many boomers are having. If you're a boomer and you haven't made any money and all the booms that have been laid on for you, and you're relying on state pensions, those guys are wrecked for with what's coming. So be glad that you're seeing this through as young, fit, and strong, and just be ready to learn. So yeah, that's the best I can give you. And I think physical commodities will serve you well.
Francis, thank you so much for your time. So if anyone wanted to find more of your work, if what you said resonated with them, which I'm sure it did, where would the best places for that be?
Yeah, we're traders and investors. So the Hunt Volatility Funnel Method is what you mentioned. For example, we called the crash to single digits in oil. Two previous Euro Swiss franc crashes, 2009 preceded the Greek crisis. So it's the news before the news by looking at the charts. So we are technical traders. We have even shorter time frame trades. We're in, for example, my community is in the Euro NOK, which is the Norwegian krona, for a short trade. I've been short Solana, crypto, for a long, long time. It's collapsed to single digits. We said it would go to $3. We called the high at $260. That's been very profitable. People can learn the HVF method. Don't go trade without proper training. People treat it as a gambling tool. Gamblers get wrecked. The house wins. You need to have method. You need to have mindset. You need to have a real approach. And there's quite a lot to that. To do that, you need to learn, and that usually requires investment. If you're interested, you can go to themarketsniper.com and you can book a call. You'll talk to somebody who's already been all through a large part of that process for at least 3 or 4 years. One of our Top Gun traders that I've trained, and you'll become part of our community. And we also talk about these reset topics and how to have an amazing life inside of everything that I've said, for which there's plenty of opportunity. Thanks for having me on.
Yeah, perfect. I'll put that in all the description below. So Francis, thanks again.
Pleasure, Anthony. All the best to you. Bye-bye.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.